I think let's definitely harping on the risk side too, right? I think like, like what are like some of the risks and how do you mitigate that too?
Yeah, that's a great question. So with any stablecoin really or lending, traditional lending market, you have the concept of bad debt, which is when the asset um, falls really, really quickly in price, leaving the protocol with bad debt before you're able to liquidate the said asset. Um, for us, we've taken some pretty interesting approaches, basically just liquidating really, really fast. Um, we've had users leverage up 17x on GLP and literally get liquidated minutes later, which is really, really degen.
That's depressing.
It's kind of like,
Yeah.
yeah, yeah. So I mean, we're able to kind of mitigate bad debt through this, and also our collateral types are pretty interesting. So GLP offers 26% yield, and it's an index token basically. It's half stables and half majors. So for GLP to drop like 10% or more in a couple minutes or a couple seconds, which is when we'd probably be left with bad debt, that would mean like a 10% or 20% drop in Bitcoin and Ethereum in those seconds. And if
hmm
that were to ever happen, I think 99, if not all, would be 99%, if not all, existing DeFi protocols would probably be screwed long before we would. So
Yeah.
that is
So that'd be like
the Black
a
Swan event.
systemic risk, I guess, that you can't really mitigate.
Yeah, yeah, that is the systemic risk across DeFi.
Yeah. If that happens, then oh, what a day. Uh, okay, so that makes a lot of sense. And so right now, just like with how I just feel like we're kind of in a bleak market where it's like, we don't know if it's going to go up, if it's going to go down. It's like really sideways, and it's been sideways for a while. Um, how how are people like parking their money? Like, how are you parking your money? And yeah, so like, just in terms of parking capital, I feel like that's an important thing to talk about when we're talking about um stable coins too. So like, how are you looking at that also? And just how can Yama be beneficial for that?
Yeah, yeah, that's a great question. In these uncertain times, it's definitely good to find uncorrelated yield. So yield that's not really, correlated with the markets, whether it's on or off. And I think Yama is a pretty good example of this. So whether GLP goes up or down, or the broader markets go up or down, USDT lenders are still earning that interest from GLP borrowers. So no matter what, you're earning interest regardless of the direction of the market. And I would say that's pretty attractive. Definitely would recommend something like that for the broader markets. Of course, I can't, I don't want to give any like financial advice like buy now or sell here. I don't know, too much myself about the broader direction of the markets. Um, I would just say, wait it out, park your money in assets you'd like to hold in a year and 2 years and 3 years and 4 years, you're comfortable with just not touching. On a larger time scale, I'm super bullish on crypto, which is probably why I have like the vast majority of my net worth in crypto. Just, stick around, I'd say, keep playing with, you know, protocols on chain. Yeah, I think that's probably my view as of now.
Yeah, that makes a lot of sense. And just in general too, like, if let's say the US dollar becomes or loses the reserve currency, then like where would you kind of park your money to, right? Because it's like a stable coin is actually pegged to the dollar. So parking money in USDC might not be the safest thing if the US dollar might not keep its value. So like where have you kind of looked at in terms of alternatives to like US dollar pegged coins?
Yeah, yeah, that's a great question. Frankly, there are a couple I've looked at. There's the euro pegged stablecoin. by Circle Labs. There's a Swiss franc CDP that I've looked at as well, and then there's a couple of RMB peg stablecoins that I believe are going to launch in the coming months. There's definitely a couple of alternatives out there. They just really haven't taken off right now. But I do think this is something people are going to explore in the future. I do believe there's a gold pegged stablecoin or store of value token issued by either it was like Tether or Circle.
Yeah.
But that might be of interest if you're afraid of that. To be frank, I don't think it's something that's really crossed my mind as right now.
Yeah, yeah, and just to add on to that, like if you peg it like to something that increases in value, for instance, the capital efficiency of the stablecoin goes really down. So I guess we don't really know what the exact future is, but the reason why we didn't like peg it to like the price index, like inflation or whatever, is because capital efficiency goes down, which means it doesn't scale,
Right.
which means it doesn't work in practice, even though a lot of people think it works in theory. But yeah, I guess there's also like Reflexer with their like they're not pegged to any like fiat currency. But yeah, I guess we'll see how it goes. I think long term, like 10-year time span, we want to eventually unpeg from the US dollar.
Nice. Okay, I get that. And so in terms of right now, the currencies that you're offering, is it only the US dollar? And also like what currencies that you plan to offer in the near future?
Yeah, so we are a US dollar peg stablecoin right now. Um, we haven't really seen fit to offer any other stables as of yet because frankly, adoption for those hasn't really taken off. We, if maybe the time comes and there is significant demand for it, we'll probably offer something like that. But yeah, we move pretty fast. If the market sees fit, we'll respond.
Nice.